everyone, welcome back. Today we're talking about something that's coming up more and more with our clients, and that's cryptocurrency. Specifically, does it matter how you hold it? The short answer, yes, a lot. The structure you choose, whether you hold cryptocurrency personally or inside a self-directed IRA, affects how your gains are taxed, how you access your money, and ultimately how much of any gains you actually keep. Let's go ahead and walk through both sides. First of all, let's talk about owning cryptocurrency personally. This is what most people do. They buy crypto through a platform like Coinbase or Kraken in their own name in a personal account. This is the most straightforward approach. You own it, you control it, you can access it whenever you want, but here's where it gets complicated. The IRS treats cryptocurrency as property, not currency, property. And that has big implications. Every single time you sell, trade, or use your crypto, you've created a taxable event. Sold Bitcoin, that's a taxable event. Traded Bitcoin for Ethereum or another type of cryptocurrency, that is also a taxable event. Used crypto to buy something, taxable. And the tax rate depends on how long you held it. Less than a year, you're paying ordinary income rates. That's up to 37% at the top of the tax bracket. More than a year, you get the long-term capital gains rate, which of course varies depending upon your income. The options of staking and mining are available if you hold cryptocurrency personally. And if you're earning crypto through staking or mining, that's typically taxed as ordinary income the moment you receive it, before you've even sold anything. For people who are actively trading, this adds up fast. And the record keeping, you must track the cost basis on every transaction. It can become a major administrative burden keeping all your ducks in a row. Now, let's go ahead and look at the alternative, holding cryptocurrency inside of a self-directed IRA. A self-directed IRA, of course, is a type of retirement account that allows you to invest in alternative assets beyond the typical stocks and bonds. That includes real estate, private lending, a whole bunch more, and yes, cryptocurrency. Here's the key concept. When crypto is held inside your IRA, the IRA is the investor. Of course, you own the IRA. But the IRA is the investor, not you personally. The gains and trades happen inside the account within the tax shelter. What does that mean exactly? If you're in a traditional self-directed IRA, your gains are tax deferred. You don't pay taxes on trades within the account. The money grows and compounds without annual tax drag. You'll pay taxes when you take distributions in retirement, but you've had years or even decades of tax-deferred compounding in the meantime. Even more powerful, if you're in a Roth self-directed IRA, your gains grow completely tax-free. You contribute after-tax dollars, but everything that grows inside that account, every gain, every trade, can potentially come out in retirement with zero tax. think about what that means for a volatile, potentially high growth asset like cryptocurrency. If your Bitcoin investment grows 5 times inside a Roth self-directed IRA, you could take that money out in retirement and pay nothing in federal taxes on that gain. Now, this is important. Holding crypto in a self-directed IRA comes with rules. The tax benefits are real, but you have to play by the IRS's rules to keep them. Okay, let's see. I can think of 4 off the top of my head. The IRA must own the crypto, not you personally. All purchases must be made by the IRA using IRA funds. You can't transfer crypto you personally own into the account. That's self-dealing. The IRA is the buyer. Your administrator facilitates a transaction on behalf of the account based on your choices. Okay, another rule. Of course, prohibited transactions. This is a big one. The IRS has rules about transactions between your IRA and disqualified persons. That includes you, your spouse, your lineal family members, and certain business partners and fiduciaries. You can't personally benefit from IRA-owned crypto outside of the account. No borrowing from the IRA, no using IRA assets for personal benefit before a proper distribution. Now, violating a prohibited transaction isn't just a penalty. It can result in the entire IRA being disqualified, meaning everything in the account becomes taxable immediately. This is why working with a knowledgeable, self-directed IRA administrator is essential. Let's see, another rule, contribution limits. Contribution limits, of course, always apply. The same annual IRA contribution limits apply regardless of what you're investing in. For 2025, that was $7,000 a year or $8,000 if you were 50 or older. For 2026, it's $7,500 a year or $8,600 if you're 50 or older. Now, you can also fund a self-directed IRA through a rollover or a transfer from an existing 401k or IRA. And that, of course, is not subject to the annual limit. So if you have an old 401k that has $50,000, $60,000, $100,000 in it, you do have the ability to roll that over into a self-directed IRA and use that for investing. Remember, the point is, this is retirement money. So if it's already retirement money, you can move that between accounts. Okay, let's talk about another rule. Early withdrawal restrictions. If you take money out of a traditional self-directed IRA before age 59 and a half, you'll generally pay income taxes plus a 10% penalty. Now, Roth IRAs have more flexibility on contributions. That's money you take out of your pocket and put into the account. That's that contribution limit we were talking about. But earnings face restrictions too. The point is, again, this is retirement money. It's designed to stay invested for the long haul. So, who benefits most and who is a self-directed IRA the right fit for? Generally speaking, the investors who benefit most are those who believe in the long-term potential of cryptocurrency. You aren't planning to access those funds anytime soon, and you want to maximize how much of the gains you actually keep. Now, if you're a high earner and in a higher income tax bracket, currently paying 20% or more on long-term crypto gains, or even more on short-term gains, the tax shelter of an IRA can be a meaningful advantage. Now, Roth self-directed IRAs in particular are powerful for investors who expect significant growth. If you believe cryptocurrency has substantial upsides over the next 20 to 30 years, locking in the Roth structure now before those gains materialize could be a really good decision for you. But again, you have to do your due diligence and you have to make that choice. That's the self in the self-directed IRA. Now, on the other hand, if you need immediate liquidity, if you're actively trading and want to use crypto for everyday transactions, or if you're already in a low tax bracket, holding crypto personally may make more sense. There is no one-size-fits-all answer. It depends on your situation. And this is why we always recommend having this conversation with a qualified tax advisor or financial professional who understands your full picture. Now, at Mountain West IRA, we're self-directed IRA administrators. Our job is to help you understand your options and make sure everything is set up correctly and in compliance with IRS rules. We are not financial advisors. We're not going to tell you whether crypto is a good investment. We're not going to do your due diligence for you. That's not our role. But if you're curious about whether a self-directed IRA could be the right structure for your crypto investment strategy, we'd love to have that conversation. Remember, always consult a qualified tax or legal professional to help you decide if a particular asset class works well for your exact situation. Now, if you found this helpful, subscribe to our channel. We post regular educational content about self-directed IRAs, alternative assets, and retirement investing. And if you have questions, drop them in the comments or reach out to our team directly by either calling us at 866-377-3311, or of course, you can always use the QR code in the corner. Thanks for watching. Bye.